Thanks for selecting this video. My name is Don Wertzman. I recently published two books. One is The Daughters of Ishtar thriller, and the other The Gyroverse, a book on original physics theory. But now I want to speak on another very misunderstood subject. There seems to be a call for raising oil companies' taxes by removing some of their special subsidies. The theory is that the government needs more money and the average people just can't afford to pay any additional taxes. Sounds reasonable. While the thought is commendable, this tax would accomplish or would not accomplish what their advocates intend. As an illustration, assume that the increase in taxes amounts to 5 cents per gallon. Let's reflect on what would probably result. First off, oil companies would raise the price of fuel by 5 cents. That increase would be passed to the oil distributors, who in turn would pass that increase to the gas stations. The gas stations would, as expected, raise the price of the gas at the pump. We, at the consumer, would have to pay that increase because we can't pass it to anyone else. In addition, trucking companies would also have to pay that increase in the cost of fuel. That would raise the cost of shipped goods, which would be recovered by the retailers with higher prices for those goods. Again, the consumer would have to pay that increase because they can't pass the increase to anyone else. In effect, all taxes by the oil companies is ultimately paid by the consumer. In truth, whenever oil costs increase, the cost is often passed on with a markup. So the consumer might actually pay even more than the 5 cent increase in the taxes. What is true for oil companies is really true for all companies. All their taxes is ultimately paid by the consumer. Even if sometimes it's hidden and takes a circuitous route to your pocket, once you accept that reality, it becomes apparent that the way taxes are collected is very counterproductive. For example, products that are made in foreign countries don't have to pay the same U.S. taxes as domestic manufacturers, which gives foreign companies a competitive advantage. And domestic manufacturers often have to pay U.S. taxes in addition to some foreign taxes, which gives domestic companies a competitive disadvantage. This makes no sense. But you might ask, why do the oil companies complain so much? Yes, they cry, just like Br'er Rabbit did as the fox and wolf throw him into the briar patch. Okay, what do I suggest? Once you cross the Rubicon, acknowledging that all taxes are ultimately paid by the consumer, and that companies don't really pay taxes, you are ripe for considering a better alternative. The only tax we need is a sales tax. Since the consumer pays all the taxes anyway, this tax would have several important advantages. Firstly, foreign companies that sell products in the U.S. will pay as much taxes as domestic companies on the products they sell here, helping to level the playing field somewhat. Secondly, domestic companies that sell products abroad will not pay domestic taxes on that product, helping them to compete more favorably in foreign markets. Thirdly, the cost of preparing and filling all business and personal income taxes is estimated to be $250 to $300 billion each year. about 20% of all the taxes collected. And lastly, it does away with the IRS, easily the most repressive of government agencies. However, in order to accommodate the poor, goods that are thought to be necessities might not be taxed, or just partially taxed. For example, the first $50 toward the purchase of shoes might be tax-free. Standard groceries and medicines may be totally tax-free. Perhaps the most important attribute of this taxing metaphor is that it's not hidden from the people who pay it. Thank you for watching.